I think what's really helped me a lot is during those tough times, I'm having these great teams that's always supporting me. And together, there's a lot of difficult decisions I have to make, which will impact most of these people's life and future. They're always aiming for a bigger purpose. We want to make disruptions for this country. We really believe on the Indonesian market and Indonesian people itself. So that kind of things that really motivates us.
Welcome to Brave. Learn from Southeast Asia's best tech leaders. Build the future, learn from our past, and stay human in between. No BS on success. I'm Jeremy Au, venture capitalist, serial founder, Harvard MBA, science fiction nerd, and dad of 2 daughters. Every week, we debate startup news, interview changemakers, answer listener questions, and share personal insights. Join our movement of over 40,000 members and get transcripts, resources, and community at www.bravesea.com. Stay well and stay brave. Hey, Kelvin. Excited to have you on the show. You're doing great stuff for the Indonesia F&B industry. Could you introduce yourself?
Hi, my name is Kelvin Subowo. I'm the CEO and founder of Daily Co. So actually, our journey started back in 2018 when we started rice box brand name Daily Box.
Great. Let's talk about your industry. Let's go all the way to the beginning. I understand you built your first company and it took you about 6 years. Could you share a little bit more about the first company you built and why you decided to build that company back then?
Yeah, okay. So it's Daily Box, or now it become Daily Co. Daily Company is my 8 ventures, Jeremy. So it's been like 7 failures prior to this company that finally taking my dreams off and makes me closer to the vision we have. Back in 2011, when I started my first entrepreneurial journey in Indonesia, idea or the vision is always about how we can build a business that making disruptions. And at that time, as you know, 2011, as an Indonesian has a 250 million populations, the idea is through consumer goods. That's why if you still Google my name, Kelvin Subowo, chips still pop up. The first brand we built is Cressley. So the idea is about how we can make branded products, local branded products in Indonesia. So the passion is always about startup. Then going 2012, I started looking into tech because I'm meeting with a lot of early tech investors like Patrick Waluyo from Northstar. I heard about Gojek and how at the time Grab still the name is Grab Taxi. So still in Malaysia and Singapore. So I think that maybe not consumer goods. Maybe I should come into some tech business. But at the time, we don't have money. Maybe in 2012, not many people know about VC, even they barely heard about PE or family office. I grew up with my mom feeding the family by cooking. So she has a catering business selling foods. By doing it, she can provide quite a decent lifestyle for the family because it's a cash business. I know most Indonesians taste palate. Funding my startup, I always open a restaurant. At the beginning, I opened a restaurant, got a cash flow business, and doing it by spending some of the cash to support the team or the developer building the apps. But we always fail because we're always losing in terms of funding. We cannot get the fund. So I opened second one, things like Tokopedia, then other things like HappyFresh. So yeah, things that didn't go well. And suddenly my team, they said to me, right, but you always doing this by making a restaurant. So during the 7 failures, I'm making around 3 restaurants. They said, I think we should consider doing something about food. In 2017, they said that to me, and I said, to be honest, I don't like restaurant business because it's a property game business. It's you must focus to having a really good locations, and locations. So they came up with an idea called ghost kitchens back then by Uber in the US. So I think, oh yeah, this might become 2017 is the rise of GoFood at that time. So we're building our first ghost kitchen in 2018. At that time, no one said cloud kitchen yet. We built our first cloud kitchen because cloud kitchen we need to expand very fast. We invest at the beginning through the central kitchen first. 2020 basically it accelerates everything because COVID happened. Everybody must, purchase things online. And we already set up the infrastructure. So we just need open through all of the cloud kitchens. So within 2 years after that, Daily Box, we call the name Daily Box, operating around 300 locations in 15, 17 different cities in Indonesia. So that's the beginning why I come into this food business.
So you mentioned that failed 7 times before this is your eighth venture really taking off.
Yeah.
Can you tell me what were the 7 ventures? Like run us through and what you learned from each one of them.
Okay. So I think number one is about the potato chips business. We called it the brand name Cressley. At that time, very young, thinking that you have to control our supply chains and everything from downstream to upstreams. So we're making our own chips, we're distributing our own chips, marketing and everything. Too heavy on the operations. We couldn't focus while learning. You need to be focused because you have finite resources and limited time. You just need to focus and expand your core strength. The second thing what we built is some kind of business models like HappyFresh. At that time, we couldn't have the right funding to offer free delivery, but we learned that at the end of the day, business is business, right? Whether you offer a free delivery or not, you must focus on what service you're really good at. You cannot go into the same playbook with other players that has tons of capital. And next, we set up another startup. We call it Gilgo. At that time, if you want to find something, people always say you Google it. But what if you don't know how to type or what kind of products you need to find? So we said you just post it online. It's just like classified marketplace. You can get from the forum about other people saying, oh, you can get these things over here and pay commissions to the community. At the time, there's also a classified marketplace like that named Kaskus in Indonesia. So we're seeing how to combine between Kaskus and Tokopedia, but again, failed miserably. After those three failures, we learned that number one, we must focus on what we're really good at, focus on who is our customers. So I'm shifting into what the market hasn't offered yet. At the time, Tokopedia really focused on electronic stuff. Shopee really focused on really cheap household. And we're seeing there's still a lot of merchants that trading through Instagrams for art stuff. This is like Etsy, platform like Etsy in Indonesia. So we made one, focus on iOS, focus on the users that really into this UX experience, premium market. Then we got the first fractions of 100 millions of revenue. We're really happy. We thought that, oh, this will work. Then suddenly Shopee offered free delivery across all of nation. They do transactions or communicate through our platform, but they do transactions in Shopee because of the free delivery. And that's where we learned that in a middle class economy, there's no brand loyalty yet because it's a very price sensitive market. So Indonesian number one is all about price driven. Then after that, trying another here and there, those kind of models of tech, I realized if we want to build a sustained startup, we must have a solid unit economics. Otherwise, this is going to be a price war, especially doing software as a service. I think it will be tough in Indonesia because people doesn't want to subscribe and spending money on that yet. So when my team coming back to me about food, I think it makes sense because at least with food, you already have about the market price. People already knew about how the food price scheme works. Right?
Thanks for sharing all those learnings. You're talking about Indonesia as a market, right? You have to be thoughtful about price. There's no brand loyalty. I think you have to let go about the managing the entire supply chain, but also making sure that you are being thoughtful about unit economics and selling something people want, which is food. You took these learnings and you set up the daily box. It was a unique time, right? There was COVID, so people had to order online. I think I understand the success of that. The cloud kitchen process has become a lot less popular. Could you share a little bit more about what happened there? Because I know it was, of course, during COVID, everybody had to order online, but and then you grew a lot. I'm curious what you were thinking about that business model.
Okay, so I think number one is because it just grew too fast. And by growing too fast, that means a lot of players focus on the growth phase where they sacrifice a lot of capital to subsidy the consumer, right? Then it just driven by the COVID situations and it makes a lot of market thinking that, oh, everything should go online. not only about cloud kitchen, right? Educations, groceries, even like offices, meetings. This is going to be the new era. People talk about it, the market hype about it. So a lot of these companies using this momentum also to hyper growth their business by, at the end of the day, Indonesian price sensitive market. You drive them by giving them subsidy. But at the end of the day, the pressure of getting the right unit economics or business models crumble everything about the market share that they've built. Plus, there's also push from post-pandemic that at the end of the day, we are humans, not only Indonesians. We are a very socialized person. So everything goes back to offline in a very fast pace. If you remember 2022, post Omicron, people thinking that, okay, we had enough. We don't want any more lockdown. So you just go with your mask and people still doing it. Suddenly the tech landscape crumbled very, very fast. And the effect that got hit is definitely cloud kitchen because two things, right? You have to pay the platform fee and you also, the customer also need to pay the delivery fee. And at that time, the logistic costs also kind of crazy with the spike of oil price. Even the gasoline price by 2021 and 2022 in Indonesia almost doubled. All the unit economics is not checked for this platform to sustain the burn. At the end of the day, they need to maintain the customers. The burn passed through the merchants. And I think that's what started the domino effect of the failure of cloud kitchens in Indonesia.
How did you find out about Rockling?
I think by the end of 2021, we started to see, oh man, I don't think this food delivery will sustain because I learned the hard way. But at that time, there's already indicators, a lot of those players coming into Indonesia and offered a huge cashback to the customers. But again, subsidy provide market to try to use, which is not wrong. But suddenly the government implement the QRIS, so one QR for all. And the banks, like the big banks, implemented it, and the user of this e-wallet is dropped significantly. They cannot subsidy the consumer anymore. So I said, if this happened to us by the end of 2021, I already asked the team that I think we should combine our business models with offline business. We already have the online infrastructure distributed across 300 locations national. So we already have the fleet to distribute from central kitchen and so on. So I said, let's find offline business that can utilize our infrastructures that we already built. And they come up with coffee business, ice cream business. And at the time I heard about Bread Life because I know the owner of Bread Life. So I approached them and asked whether we can acquire them. At that time, I think 100% of Bread Life or locations is in malls. So it's a tough times for them. But I believe that usually, Bread Life business model, they bake on the spot. So if it's in malls, the cost productions per square meter is really high because they're using the mall rentals, right? So we're shifting that business model after we acquired. We set up a central productions and using the network of distributions to distribute the bread across all the locations. We improve the unit economics significantly. And we're just blessed, because 2022, we thought there's going to be another lockdown, but suddenly it opens and we got the benefit of malls starting to open again. Every month, I have to close around 30 to 50 outlets. So after 3 months, we are from 300, we got 150. Then after 6 months, we become less than 100. We're just lucky enough to have Bread Life that sustain our business.
I think that's really interesting because now you're making a set of decisions about this layoff and you're pushing
Mm.
into kind of like in person. How did you figure out that new business? I met many Indonesian founders during that time and a lot of their companies went bust, right? And they closed down. So I'm just kind of curious, how did you react differently, I guess?
I think because of the team, right? Because of the people. I shared with you that I started this journey since 2011. So even though Daily Box only established in 2018, the team's been with me since 2011. Now it's been 14 years, some of them 10 years, 11 years, 8 years. So prior to Daily Box, they already been with me. When the business goes down, many companies need to cut their operation costs. They need to cut some people. But these people's been with me since my day one. We're facing two things: scaling down, cutting these people, or we're just hitting the pedal and find another things to scale up the business. So I said with my people, I said, this is do or die. If we want to survive, we need to cut costs, we need to cut people, which is very hard for me to do. But we need to go back to our original scale when we operated 300 locations, not with Cloud Kitchen. Maybe at that time we haven't figured it out about life yet, about the bakery business. So we're just thinking that let's just do it. And I'm glad that most of these people have one voice and said, let's scale it up faster. That helps a lot in terms of surviving because I'm not surviving all by myself for my company. We have a great, solid team that's still been with us until today that has the same mindset. In order to cover this cost, we need to reach this scale. And when we find a winning formula with Bread Life with using this bakery, we just hitting the paddle and focusing on expanding the offline business very fast.
When you pivoted this, you had to look for the new business model, and part of it was offline. You went on to become more of a venture builder or acquirer of brands. I'm curious how that transition happened.
Okay, so after we successful with Bread Life, we realized it's easier for us to get the benefit from this infrastructure or ecosystem that we built because we already have the economics of scale. It doesn't make sense for us if we have to start and build some brands from zero because it won't get the benefit of the skill that we have built. That's when we started to see, because it's also post-pandemic, a lot of business also in trouble because they have to close down and lay off a lot of staffs, and a lot of brands needs to inject more capital or team to scale up again. We see the potential where we can get this business with a good price. When we infuse it inside our ecosystem, we can scale it up faster from the founders. We learned it's not easy to develop a brand. We have around 12 brands. And if we operate as one single group, even though the brand purpose is different, we will operate it because it's the same person running it. When we acquire the brand, we offer that the founder still inside the brand, still running the operations, but we will help them scale up using our backend. They don't need to worry about HR, finance, supply chain, procurement, and so on, logistics. They can just use ours that we've already built and scale up faster while we're not losing the soul of the brands where the early founders set up.
And when you talk about buying these companies, how does it work? Because
Mm.
buying a business is very different. How do you go about buying a brand?
I think because our organization is quite people focused, I'm talking about my team. Some of these founders also heard about how we try to survive without doing a massive layoff, which about our people. So their mindset is they want to grow the business. So if the founder looking for just a pure exit, they definitely won't be looking for us. We already stated when we're coming into the business, we must go with the majority because we have our investors and shareholders that we accountable for. So we need to really make sure that we have a strong hold on every process they do. The idea is always about the founders that running the company get supported and scale up the business faster. So when we into a business, usually we only acquire the assets, the IP. We don't want to deal with the complications of the previous entity about tax exposures, other shareholders, conflict, and so on. So we just clean slate up a new entity, transfer the IP and the assets, and fuse our team and the management to help the company grow.
How is that price calculated? Because I think theoretically the business makes sense, there's a lot of synergies, but how does that negotiation happen?
Because conventional founders, most of their business is never invested by VC. They're never exposure to the capital market or startup business. This is just a pure founder that wants to have more outlets and make sure that more people know about their brands. Typically, we're doing a deal around 3 to 5 times their earnings. It must be a profitable business because we don't want problems with profitable business means the business models already works at least 3 to 5 years on the market. That market's already accepted. We don't want to touch only trendy business and after 1 year then the business goes bust. We really avoid that. But the founder realized that the big chunk of the reward is not coming from the early payments, whether it's 3 times, 4 times, 5 times. It doesn't matter because the size of the business is still very small. maybe they only have 3 to 5 outlets. But when they're joining with us, they can instantly go to 15, 20 outlets. So the payout from the dividend itself is already bigger than the first amount that we offered for them to take the majority of the business.
When we talk about this, let's just say you buy a company, what are the top three things that you need to do in order to make it actually worth it? There's some sort of payment that happens later, so that helps aligning performance incentives. But what are the three things that you need to do in order to make sure that this brand succeeds rather than fails?
I think number one is the founder. So we really focus into the people and the founder because we are operator by ourselves, right? So we know what kind of people there's a business anyway. So that's number one. And number two is the synergy we can bring on the table, whether we can help them to better COGS, better operational costs by using our central kitchen, better unit economics, or using our logistics that can squeeze more margin. So when we fuse them inside our infrastructure, they get the benefit of it. So we really calculated about the integrations that can happen in places, and how fast we can do it depends on how open-minded the founders and the existing team trust us. Number three is we don't want to go into trendy business. When we name Daily Box now Daily Company, we focus on comfort food, staple foods, comfort things. If it's going towards lifestyle, I don't think we want to do it yet because we just really want to focus on typical foods or business that complementary and support our users or our customers right now. So we call it the share of belly. Usually people having breakfast, lunch, dinner within this pool of customers, we want to grab as much share of belly as we can. We have bakery for breakfast, brands for lunch, for dinners, for supper. We have snackings, we have dessert. So those kind of ecosystems that we're trying to build and make sure that the brand we acquired is not cannibalizing each other.
Let's talk about your share of value, breakfast, lunch, dinner, snacks, dessert, comfort
Mm.
foods. What do you think are the fastest growing segments versus the slower growing segments from your perspective?
I think bakery business definitely having a great growth. It's a flour based food because rice and chicken definitely is become the main consumption for Indonesia for so long. But the competitions is tougher, and now people starting to think about what's the substitute of rice. And basically definitely noodles. Noodles also quite popular in especially in Asia, right? But now we're started to see the consumptions per capita for bread is increasing. The CAGR is quite amazing. So I think we're glad that we're into the business early so we can tap into the growth of the bread business.
And when you think about the relationship with platforms, right? So you mentioned previously that delivery is a big part of the cost. Obviously, you went to create these collection points for people to pick it up. What is your relationship with these online platforms from your perspective?
So I think we're making a good partnership, and I'm still a huge believer of the food delivery. So don't get twisted between cloud kitchen and food delivery concept. So right now, the food delivery concept is still delivered from our offline locations, right? Where the cloud kitchens model is usually when you just, rent it out the locations. You don't need a facade, you don't need a front shops, just shop fronts just running. It's a cloud kitchen models. But right now, even we're still having maybe around 100 locations of food delivery points and still generated like a decent amount of revenue from the food delivery. Even right now, from the total group, we still have maybe 15 to 20%. It's still significant numbers for food delivery. I think the platform will also have a mutual respect towards us because not many brands that still survive. When we started is 2018, that means already 7 years. I think there's also a lot of brands that's already comes and go, but we're still here. We're still expanding, even adding more brands. The platform must do what's right for the business. They must become profitable, otherwise it won't sustain. But at the same time, we also, hold ourselves a little bit from expanding online because the unit economics is not favorable for us right now.
There's a lot of buzz and competition in the quick serve beverages. And then the other side is the entrance of Chinese comfort food franchises as well. Could you comment about those two trends?
Since I think last year, I said to my team is at the end of the day, there's a lot of great Chinese brands will coming into Indonesia. And when it happen, it will be tough for us if we don't have the competitive advantage towards them because they have more capital. Even I joke to the team, they work harder and they work faster than us. But the fundamental of our business is driven by people and the team. So I still a strong belief that what's going to make us accelerate is because of one of the thing is because we won't grow organically. It's always about inorganic expansion through a lot of M&A. But if you notice, Jeremy, you've met with a lot of companies as well. Not many companies doing acquisition, even merger, and looking good. Usually after they merge, problems started to pops out, and usually this founder exit and the other founders also out, right? But in our case, I think for the past 3 to 4 years, most of the founders that join us still in the daily organizations. So I call this like, this is just like Avengers mission. I always said to the team, right? We have a different expertise. And back in the days, we are competing against each other. But now, just join forces. All of these great founders has been doing something amazing. They must be doing something right. They can sustain for this long period. So we just combine all of this knowledge to help us doing better in terms of operations. So just put it simply, usually if we want to get things done, it takes 5 meetings. Now the mindset is how you get things done in 2 meetings. Now you're talking about the coffee business as well, right? I think that's one of the reasons why we haven't tapped into beverage market. We really focus on the food side. Even though all the business and food and beverage is just like if you're just in the operation, it's two different things between food and beverage. We don't want to touch beverage yet because it's still a very competitive market because the unique selling propositions in terms of beverage, it's non-stop innovations about the brandings. As you know, but when we're talking about brandings, this is a market where you facing with a very price sensitive market. So the idea is how you deliver a better product with a cheaper price, even though it's already cheap. So with food, we're lucky that consumers already have certain expectations about the price of food and the budget they will spend. I think we're going to focus on that area. We're already seeing some, but next year is going to be more. A lot of great Chinese players will in grabbing the market, which is very price sensitive. It will be tough. That's why I encourage a lot of founders out there, rather than compete, we should collaborate and find the best synergy between two entities, two companies, or two leaders.
I love the Avengers analogy. So I guess the Chinese fast food would be like snapping their fingers. A big part of what's happening is that they're escaping the competition that is very cannibalistic in their own market, and they're looking to diversify their revenue sources. So they're willing to take a lot of losses as part of the expansion. That they're fundamentally cheaper or fundamentally working harder, but they're taking their market entry Indonesia with, lower than market pricing in order to get market share, get some customers, build up beachhead. So do you think the strategy from your perspective would be obviously continue getting cheaper, but focus on break even or profitability and outlast them? Or do you think it's more fundamental where you're actually going to have to push even cheaper and fight them there?
I think from my perspective, since day one, right, competitors really important because they are the one that push us to do better. But our organization never really put a lot of attention to that. At least that's not our main priority. We're looking more towards what our consumers really needs, right? Definitely, they need a cheaper price with the decline of consumer spending. We can see how it's getting tougher for a lot of consumers. So offering more valuable products definitely one of the strategies that we're going to do. In terms of getting that competitive advantage in terms of price, definitely we need scale. That's why M&A will always be on the horizon for us. I think right now we're trying to build a whole upstream, downstream system food business in the country. Hopefully, whether it's the Chinese, the Indians, or whoever wants to come to Indonesia, rather than see that they compete with us, we can offer them collaborate using the infrastructures we already built.
Could you share a story about a time that you've been brave
Yeah, I think as founders that started the business 7 or 8 years ago, we have experienced tough times during the COVID tech winter now about the global landscape, right? So we have get through all of those headwinds just like every 2 years, there's always something new. Even a lot of my colleagues or my friends that saying they're making 5 years projections, you don't know what will happen next year, and those projections is not valid anymore, right? I think what's really helped me a lot is during those tough times, I'm having these great teams that's always supporting me. And together, there's a lot of difficult decisions I have to make, which will impact most of these people's life and future. They're always aiming for a bigger purpose. We want to make disruptions for this country. We really believe on the Indonesian market and Indonesian people itself. So that kind of things that really motivates us. And a lot of founders that merge or acquired by our companies realize how we treat talent in our organizations that help us, sometimes this kind of tough times coming. We as a founder, sometimes we're faint-hearted because shit, whether we can deliver this or navigate through this storm, but it helps because they've seen progress. They've seen how we navigate through a huge storm. Now there's a bigger storm coming. And I think because we've been through a lot, this is just like battles. I share with you the analogy of the Avengers. At the beginning, everybody just focus on their strength. When problems comes, when adversities comes, it's just a matter of time whether you will consolidate your power and focus on each other's strength and supporting each other, or worrying about the problem. So I think my team is definitely the one that really helps us to thrive.
Could you share what made some of the tough times tough over the past few years?
Because it's unexpected. So that's what I learned is about manage our expectations. We always prepare for the worst and hope for the best. We're thinking that 2023 is going to be tough because political year for Indonesia. After the general elections, we're thinking that okay, things will get better. Then 2024 general elections happen and then things get worse. Then there's a problem with the trade wars as well. Then we're thinking that okay, hopefully after 2025 things got more stable. But suddenly now it's more uncertain. And even we can see how the investors seeing Indonesian market also quite pessimistic about what has happened for the past few months. And we as Indonesian entrepreneurs got hit really hard. It makes it really tough because it's just like whatever you plan or thinking tomorrow will becomes, not even like the slightest like 20% will happen. It's just like sometimes it happens.
I'd like to summarize the three big takeaways. Thanks so much for sharing about your early entrepreneurial journey, about how there were 7 startups before the eighth startup worked out, some of the learnings that you had, and why you were inspired to always be focusing on food as the core mission and vertical based on your childhood experience with your mother. I thought it was fascinating to hear about the dynamics around the F&B industry in the early days, from the cloud kitchen to online delivery, and how your company had to get through pandemic and was, pivoted, got succeeded because of it. It was interesting to hear those lessons. Thanks for sharing about the future, how you see roll-ups and acquisitions of other brands as part of your strategy, and how you see the Chinese food brands coming in as strong competitors, and how you're planning to assemble an Avengers team to compete against them. On that note, thank you so much, Kelvin, for sharing your experience.
Thank you so much, Jeremy. Thank you for having me. Hope we can build as you also watching how we grow our company. Talk to you soon.
Okay.
Thank you for listening to Brave. If you enjoyed this episode, please share the podcast with your friends and colleagues. We would also appreciate you leaving a rating or review. Head over to www.bravesea.com for member content, resources, and community. Stay well and stay brave.